Hello, my name is Ryan Grundy. I'm the lead of ecosystem management at Payments Canada. With the 2024 summit on the immediate horizon, and in keeping with our role as connectors and collaborators within the payments ecosystem, we're bringing you a series of speaker spotlights in order to give you an in-depth view of some of the musings and views of prominent figures within the Canadian payments ecosystem. Today is absolutely no exception, and we are absolutely delighted to bring you an expert lineup of speakers for this specific webinar. And with me today are Brigit Carroll, Policy Lead, North America Wise, Mahima Poddar, Equitable Bank, and Alex Vronces, the Executive Director of Fintechs Canada. So before we dive into our discussion, I'd like to turn the microphone over to our esteemed guests in order to give their own introductions and tell us a little bit about who they are and what they do. And we'll start with you, Brigit.
Hi, everyone. My name is Brigit Carroll, and I do policy at Wise. Wise is a global payments company building the best way to move and manage money around the world. Our mission is instant, convenient, transparent, and affordable cross-border payments. So I'm really excited to be here today and talk more about everything that's happening in payments in Canada. Thank you.
Excellent. Thank you, Brigit. Mahima, we'll turn it over to you.
Hi there, Mahima Poddar. As Ryan mentioned, I'm the group head of personal banking at Equitable Bank. Equitable Bank is Canada's 7th largest bank, and our mission is to drive change in Canadian banking to enrich people's lives, which of course payments is a huge part of. So within personal banking, we have any business that touches the end consumer. We also have payments as a service, which is a business we've recently launched. And personally, I've been covering payments in Canada since at least 2014. So I'm really excited to say that after 10 years, it looks like we might be on the doorstep to enable both innovation and competition in payments. So excited to be here today to talk about that.
Thank you very much, Mahima. And of course, last but not least, Alex.
Thank you, Ryan. And thank you for the warm opening remarks. I wish you'd so warmly receive me whenever I called you to complain about the various things I complain about. I'm Alex. I'm the Executive Director of Fintechs Canada. We're an industry association of Canada's most innovative financial technology companies.
Thanks, Alex. It's never a problem. Feedback is a gift, and we appreciate it. So thank you very much. So look, last week was a pretty big week for many of us within the financial services sector and the payments industry. The government announced its 2024 budget, and as anticipated, there were several measures that were detailed, which are specifically relevant to the financial sector and, of course, to the payment industry. So, Alex, I know this is subject matter that's very near and dear to your heart. So I think we'll start with you. What elements contained within the 2024 budget really stood out to you or were really relevant to your sector?
The two things that really struck me are one, the story the government was telling about the fintech scene in Canada. If you look through the budget, the placement of some of the initiatives that fintechs have long supported, namely open banking, was placed in the part of the budget that really made it clear that open banking will help. It'll help make your life more affordable. That's a message that we've been trying to convey for a long time. The other thing was that in a lot of the government's storytelling around that, fintechs weren't risks to be managed. They were actually part of the solution. That's another thing we were very happy to see. And then in terms of policy commitments, the thing we were all expecting, and the thing I think so many of us were happy to see, was the very substantial and specific update the government gave on open banking. This is probably the most substantial and specific update we've seen to date. The government named who's going to be the overseer. It alluded to what the mandate was going to be. It released a policy statement that specified what the framework was going to look like. And though it didn't reaffirm a deadline for when open banking will be switched on, so to speak, it did commit to tabling legislation this spring and this fall to actually reveal and get the framework into force. If all goes well and the government, lasts until the next election is slated to happen, we're anticipating that this framework will pass no later than 2025.
Excellent. Thank you, Alex. Brigit, we'll turn it over to you now. What was it that stood out for you as part of the 2024 budget?
I think Alex kicked it off right with the open banking or consumer-driven banking framework. I think that was one that we were really excited about. Wise has been at the forefront of open banking in other jurisdictions like the UK, where it's seen to be a big success. I think there's more to do in terms of one, clarifying those timelines. We're excited about it, but let's kind of put some dates to that. But secondly, looking ahead, we're not only limiting, we're sort of not stopping there. How can payments initiation eventually become a real competitor to, for example, card payments in Canada that will drive down price? So I'm really excited about this first step. I think there's still more to do after, but we are certainly welcoming that move and excited to see it. I think the other part that was really interesting to see was the government encouraging, the provinces and territories to cut junk fees, part of this broader junk fees narrative. And we have seen this in the US as well. Fees that are hidden from consumers, that are unnecessarily taking away from Canadians. And I think it's really important on this one that we don't forget hidden fees in cross-border payments and remittances. So I would urge the government to think about how to include these types of junk fees. So when we talk about a junk fee in a cross-border payment, it's a hidden fee in that exchange rate that's not disclosed to the consumer. Actually, the cost of these payments today is still quite high in Canada at around 6%. That's double the UN Sustainable Development Goal of 3% by 2030. And so looking to those global goals, and also in a cost of living crisis and affordability being a hot topic, I think this is one that can't be overlooked, especially for migrant communities, new Canadians, Filipino Canadians, Indian Canadians who are sending money home every paycheck. This is a real issue, and I think it can't be overlooked. So we're glad to see that junk fees initiative come through, but would like to see a little bit more specificity, I would say, on that one.
Excellent. Thank you, Brigit. And finally, Mahima, what was it that stood out for you with the 2024 budget?
I'd absolutely echo the comments from Alex and Brigit. Open banking was a huge win that we were really happy to see be so prominently covered in the budget, and then junk fees as well. And the last one that I would add that we haven't really discussed is the deposit insurance review that was mentioned in the budget. So on open banking, kind of echoing that sentiment around would have been great to see a timeline. There is narrative of 2025 being the goal in timing, but my personal fear is that because the date hasn't been publicly committed to, there's still quite a bit of room for the incumbents to push back on timing. I think they're going to naturally state how difficult it's going to be to move their giant organizations to be ready for that timing. So, I mean, let's see where it lands, but that's kind of the one nuance that I would love to see something more publicly be stated so that we have a surety that we're moving to open banking within 2025. On the personal banking or personal finance front, I'm really happy to see the deposit insurance review. Again, I think we've made some steps in the right direction. Love to see a bit more formality or definitiveness to what's been mentioned. But the last time the CDIC coverage was reviewed or set was in 2005, and that's when the 100,000 limit came into play. And so even if you think about it from an inflation adjusted perspective, that 100,000 should at minimum be 150,000 in today's environment. And even if you look at the FDIC limits, and some of the provinces have their own limits where credit unions are, they're all considerably higher than 100,000. And the reason it's so important is obviously the value of the insurance as one element, but from a competition perspective, it allows Canadian consumers to give more credence and trust to smaller players and to challenger banks that might be more new on the scene, like EQ Bank. But overall, really good to see that review taking place.
Great points on the deposit insurance for sure, and that's something that we'll be watching closely as well. But the timing of open banking, even if legislation does pass in 2025, if there are regulations that will be developed under the legislation, that will take another 12, 18, 24 months. There might be a bit of a grace period for implementation if certain financial institutions say, oh, this is so hard, I can't do it, it's going to cost me a fortune. One thing I've never understood is why, without the government telling anyone to do anything, I can benefit from the use of APIs when I'm logging into my favorite news publication using my Google credentials. But in the financial sector, people are kicking and screaming and just dragging their feet.
And maybe just to piggyback off of that, that's where the governance is really important, and that's been laid out, right, within what they're going to do and this new position that's being created. But what we saw, for example, in Europe, where open banking has been much more difficult compared to the UK, was exactly that, which was this very long process of implementation and a lot of back and forth between the original data controllers or incumbent banks with those of us that were testing these APIs, and the regulator actually asking for fintechs help to see, are these actually at the uptime they're at? Are these viable? Would a consumer be able to use this today if it was turned on? And so there is a lot behind that, but that's where it comes back to, we have to incentivize this data sharing environment with the keeping in mind that the original data controllers may not be incentivized to do that. But it's ultimately for the benefit of consumers. So we have to get there, and it will be definitely an iterative process.
I think to that point, though, the potential watch out is when the UK pushed consumer-driven finance, it felt like there was much more attention on competition and the benefits of competition. Whereas, like, I know the narrative in the budget points to that, but I think the real reason is screen scraping prevention. And so if we don't put the right mechanisms in place to ensure that the APIs are usable, that the UX is controlled on some level around consent, et cetera, so that it actually gets consumer adoption, it's another risk that it doesn't actually set up for real competition and innovation. And instead, you have the bigger players kind of calling the shots and somewhat potentially like tick boxing to be compliant, but it not really get the use and, again, innovation platform that we're all hoping for.
Well, thank you. That's great responses, and doubling up on the responses, so the passion is apparent. In preparing for the summit, talking around themes of the future of payments, judged on your responses here, it sounds as though there's quite a bit of urgency out there in the ecosystem. The future can't come soon enough. The other thing really picking up on is sort of the end user centricity, of your views, sort of the common denominator for each of you, putting the consumer and the business owner first. Alex, you talking about sort of this welcome development where fintechs are no longer cast as the problem, but as part of the solution. Brigit talking about sort of more transparency and the elimination of junk fees. And then Mahima, again, talking about the deposit insurance review, things that ultimately stand to benefit, consumers and Canadians in general. Kind of keeping along that theme, there's obviously, and culturally, in Canada, we tend to be fairly, it's sort of a slow and steady approach. So obviously the elements of trust and safety are things that sort of come out, front and center. But obviously one key element of meeting customers' needs is to reducing friction. So just curious, and Brigit, we'll start with you. What do you see as far as the future of payments is concerned that will make consumers' lives easier and reduce some of that friction while also ensuring that we maintain trust and safety within our systems?
Yeah, I think one of the elements that we hear about a lot from our customers and have heard from our Canadian customers specifically is, where is my money? So there is a lack of trust when money doesn't get from one end to the other, especially when it's cross-border. You're worried about where that money is. Is it going to get there on time when I thought it was going to get there? And so what we've seen is when, real-time rail or faster payment systems, come to fruition in that country, then we actually see that trust grow. So what we see is from the Wise side, customer satisfaction will often double or more when that payment is instant. And so I think just coming back to a little bit beyond the budget, but with this very exciting announcement on the real-time rail, sort of clarifying and giving just confidence, I think, to the sector that this is going to be delivered is really key. Because think about it from the consumer side. you don't see the plumbing, you don't see the background, you don't understand why the payment isn't getting there yet. And so Canadians deserve faster payments, cheaper payments, like I spoke to, transparency, and that will ultimately feed into trust.
Excellent. Thank you very much. Mahima, we'll turn the microphone over to you. What is it that you see coming down the pipe that will basically make Canadians' lives easier from a payment perspective, while also ensuring that trust and safety is maintained within the system?
I think the biggest thing that I'm excited about, and I think Canadians in general will gain from, is better domestic payments. So if you think about it, a average consumer can only send $3,000 a day through the e-transfer system. So obviously many cases where you need to send more than $3,000, the data shows that most people are sending repetitive e-transfers multiple days in a row. And then if you need to send money more urgently, which should be commonplace in a developed country like our own, they need to send a wire transfer, which largely involves physically going into a branch and setting up a wire transfer, which costs anywhere between $30 to can be $100 plus, depending on how much money you're sending. And so with great innovation like Wise and other international players, you can send money instantly to hundreds of countries, whereas it takes, like, on average, T+1 days to send money in Canada through, for example, the EFT system, which again, most consumers do not even have access to. And so I think this will be the biggest win with real-time rail and again, the speed of payments. And then from the trust and safety perspective, I think there's going to be a line to manage here in terms of we need to cast a wide enough net in terms of participants on real-time rails to gather non-bank participants. But again, there is this real challenge of not making the net wide enough because you still need to protect consumer funds. So I think a reasonable accreditation model can solve that, because what's happening right now is that customers largely are depending on the big banks or the banks in general to keep them whole or reimburse them for losses. And I'd say, like, that is also changing because as fraud increases in the market, I mean, we all saw that class action lawsuit against BMO, where maybe they're not actually keeping everyone whole. But anyway, that's been the model to date, is depend on the big banks to keep you whole. And as fintechs and other participants join RTR, which absolutely should be the case, I think we just need the right liability and accreditation model so that if liability sits with the non-bank entity, that they will be there to fulfill that liability so that the consumer is not left holding the bag.
Excellent. Thank you, Mahima. And Alex, we'll close with you on this particular question. What's the secret sauce in terms of striking the appropriate balance between reducing friction and prioritizing trust and safety?
I'll get to that in a second. I just want to add one thing to what Mahima said. I wrote an article a while ago about push payment fraud, and it was picked up by a couple of media outlets. I remember doing a podcast interview with one of them, and it was a good episode. I got to talk a lot about the nerdier parts of payments that most people don't get to hear about. And I was surprised a few days after it was released to get this flooding of emails in my inbox from Canadians who had been the victim of fraud and were made partially whole. Some of them were made fully whole, but some of them were made partially whole and then forced to sign NDAs so they could not talk about the fact that they weren't made whole by their bank. And I thought, we don't collect good stats on how much fraud there is in Canada, and we don't know exactly when or why or how Canadians are being reimbursed. And I just thought there's probably a big problem here that we just don't know about because the victims are being muzzled. So that's something super important on how we strike the appropriate balance. Look, a balance does need to be struck, but if I hear, we need to strike a balance one more time, I feel like I'm going to punch a hole through my monitor, because I don't think we know how to strike a balance. I don't think we know how to prioritize trust and safety in the ecosystem. I say that because we've long used that as an excuse for inaction. we can't do this big thing because of trust and risk and safety. Meanwhile, just to talk about open banking some more, while we did nothing because of risk, millions and millions of consumers were giving away their online banking credentials. We're giving up the passwords and usernames to their accounts. That sounds like a huge risk that we neglected to manage because we were too scared to act. I also think the idea that there's a trade-off between more competition, innovation, and stability is false. Of course, in a market with absolutely free entry and exit, you can have banks behaving in very risky ways. But you can also have the same happen in a very concentrated banking sector where profits are really inflated. More profits means I can take more risks with those profits. The reason Canada has a really robust financial sector is because OSFI does a really good job for the most part. They mandate high capital requirements. Our banks are lower leverage. There's less securitization. The curtailment of off-balance sheet vehicles, restricting the assets that banks can purchase. All that goes towards making our financial sector secure. The government can, in addition to that, make policy choices that introduce more competition in the banking sector, and they've done that over the years. In the 80s and early 90s, the Canada-US Free Trade Agreement exempted American banks from the cap on foreign bank assets in Canada. The modernization of financial sector policy in the 80s and 90s to replace the four-pillar model had as one of its core motivations to promote more competition and innovation. In the 90s, Paul Martin blocked the merger between two very large banks, or I guess there were two on the block. The point is that history shows in the presence of very strong prudential oversight, there is room to promote more competition and innovation without sacrificing the stability and security of the system. So I don't really like the question. I feel like it's an excuse for inaction because many of the people who have decisions to make don't actually know how to strike the balance in the first place.
Excellent. Thanks, Alexis. Well, sorry, Brigit, were you?
Can I just come in on that? I love Alex's spicy response. But I would just say I there is something there on the concentration risk, and we have a lot of these conversations with regulators around the world where, exactly like you're saying, inaction, and with the growth of our type of sector, for example, you've got a handful of fintechs increasingly clustered, putting payments through a handful of banks. There's a point at which that number gets so big, there is a real risk in terms of concentration that needs to be mitigated. And that is one of the reasons and rationales that we've seen from other regulators in terms of opening up as well. Of course, in a risk-based way with clear criteria, essentially on par with what banks had to do. For example, like us, when we integrated with the Bank of England directly, we were put to all the same sort of assessments, credit, liquidity, IT, et cetera. So it's super important, but I would agree just with the feeling that, yeah, it's not really mutually exclusive. I think, these are things that we have to look at as a whole. And certainly there are benefits in terms of mitigating the risk by opening up too.
Excellent. Thank you very
much.
Yeah,
we're so risk averse. We're so risk averse that we're afraid to manage risks. It wasn't until too long ago that the ACSS was collateralized at all. Real-time payments today aren't real-time in the back end. There's credit risk there. We know our regulators are worried about that to some extent, and yet we're so afraid to manage the risk. We just don't. In the name of risk management, it's so confusing to me. I can't understand it as anything other than an excuse for an action.
I'd almost take it a step further too and say there's another risk there, which is the notion that we are going to become uncompetitive on the global scene, which we probably already are, that isn't really being managed. And Alex, I love what you said about OSFI, and they're absolutely doing a fantastic job in terms of managing the stability and security risk, but it feels like competition and innovation is nowhere on the lens of that regulator. And so inadvertently, we might have the most trusted and stable or optically stable system, but there are other risks that we're introducing around really falling behind, the infrastructure not keeping up to date. We have so many new immigrants coming to this country who look at what they had back home and compare it to Canada, and it's almost embarrassing the kind of environment that we are putting forward. And so I feel like there is that other kind of group of risks that we really need to be considering.
For sure.
Excellent. It's common theme, obviously, challenging the notion that status quo is the utopia. And, really what it sounds to me is though, really what's needed is new. And so, I think a little bit, Mahima, about what you'd said. And I think, Brigit, you touched upon it as well with your comments around, casting a wide net for participants going forward, looking at concentration risk. It's kind of a good segue to my next question. When we look at the future of payments, we've touched upon themes of there being new oversight, new access opportunities, and new services. Obviously, that pace of change will need to sort of be facilitated by what you think would be some sort of partnerships within the ecosystem in order to sort of ensure that we're plugging in new participants while also sort of leveraging the benefit and ubiquity, of existing entities. So, along those lines, and Mahima, we'll start with you. Talking about partnerships, what is it that we can do in that field to help ensure that we're addressing both current and future market needs through partnerships?
I think here in particular, the banks have a responsibility to change their mindset around partnerships. I think there has generally been a rhetoric on you're better to keep it within the ecosystem, and that there's a market share play here for the larger banks by again, keeping it within the ecosystem. Equitable and EQ Bank have been really different. Admittedly, we are not anywhere near the scale of the bigger players, but by looking at it differently, we've been able to actually create partnership as a strategic capability. And so our philosophy is there are some things that we do incredibly well, like deposit gathering, for example, where we will continue to own that space. But there's so many areas where there's such viable and actually best of breed services being offered through non-bank partners. And so our philosophy is let's connect with those best of breed partners in a seamless way to bring the best to the consumer. And actually we have a partnership with Wise around international payments that's been absolutely fantastic for us and for our customers. I would say that though that if you're going to kind of lean into partnerships, there is a real capability that needs to be built around it to make it viable for both parties. There's a bit of relationship building and sourcing in terms of, who's out there and matching what you want to do. Legals is a huge element of this. I've seen big banks literally take years to agree on terms and legals with fintech partners, and literally run those fintech partners dry because they don't have enough cash on hand to be able to survive this multi-year cycle. Again, getting to speed to market and revenue for those players, and then really having this test and learn mentality around what's going to work around the partnership. And so setting it up as a capability is really important. This is a bit of a watch out. The other thing I've seen is some incumbent players actually try and step in on a fintech's IP, which obviously makes it completely impossible for that fintech to move forward. So in general, I think we need to set up a landscape that's more conducive to partnerships. We cannot be okay with these environments where, the innovative and fintech players that exist in Canada are somewhat being taken for a ride. And so I think there is grounds for what are the rules of engagement that we're collectively comfortable with around partnership.
Excellent. Thanks, Mahima. Let's throw it over to you, Alex. Any thoughts around what we need to do to create a constructive solution around partnerships?
I think it starts with changing the incentives of many of our banks. There's a small number of banks in Canada that are open and willing partners to fintechs. I'd argue they all happen to be members of Fintechs Canada. Banks like EQ are the exceptions that prove the rule. There's just no incentive for them to really do it. I've talked to many companies, both big and small, Small companies definitely struggle to find banking partners here. A lot of them turn to the US, where they say banks are lining up to do business with them. And then I've talked to very, very large tech companies who are launching financial services products, even though they're not really known as financial services companies around the world in the US. When you ask them why they don't do it here, they say, you can count on one hand how many like willing and able partner banks there are. The market for this in Canada just is not there. So you have to change the incentive structure. How exactly you do that, I'm sure we could talk about for the next 45 minutes. So maybe I'll just stop there.
Maybe it's just something I would say there is like there's also the problem that there's just not enough banks in Canada, and it's actually super difficult to start a bank and be viable as a small or even medium-sized bank in Canada. And so I think that's part of the challenge here is partnerships are most attractive when you don't have scale to do it on your own. And so that can be an incentive, but there are so few players in Canada, and there isn't legislation or regulation that actually promotes any advantage for a small or medium-sized bank. And I'd actually say it's quite the opposite. So it's almost a chicken and an egg problem, but I do think we need a market that's more conducive to even having smaller banks exist and competitive in the market.
Perhaps that's one thing that OSFI could be doing better, because I have heard, in many conversations that the way they approach supervision is punitive to the types of banks that you're talking about.
Yeah, I mean, there's this principle of proportionality, but it's very, very fuzzy, I would say.
Yeah.
Thank you. And Brigit, how about yourself? Any views on partnership you'd like to share with us?
Yeah, I think Mahima spoke to our partnership with EQ, which we are also very happy with. I think, share a lot of values and goals. But what we see in terms of, what we call Wise platforms. So this is where we partner with banks, credit unions, other financial institutions to essentially do exactly what you've both been speaking to, which is, hey, there's a real value for our customers. We might not have the expertise or frankly the time or just the investment to do this ourselves. Let's use Wise's technology to power that and power that infrastructure. It's really a win-win. And I think where we see it a lot is also in those smaller institutions where, it's a local credit union. It's going to be, one branch somewhere where people would have to go in person. This would actually be amazing to have an international payment function that was, delightful and cheaper and more transparent. And I also think it goes back to my point on transparency. We thread that through. So for example, through Wise platform, we ensure that transparency isn't being sort of given up. Our partners also have to be transparent when we do this. So I think it's a great example of how partnerships can benefit, but I also do resonate, like that point resonated with me on the lack of incentive, I guess, and just in terms of competition. But I also think it's sort of a snowball effect where the second that you do have one of those big players sort of jump in line, you will see that just go very quickly. But it seems like we're not quite there yet in Canada. And so I'll be curious to see, I think, over the next few years, like how that plays out. And, competition is good. It will drive price down. So we'll be watching that closely for sure.
Excellent. Thank you, Brigit. It's always interesting to sort of convene a panel of payments experts and people who are passionate about the payment space and, gather these views and collect these views. And I wish that was sort of, universal, obviously, as most of us maybe take off our work clothes and sort of emerge into our respective social arenas. Seems to be that there's not necessarily that same focus on payments within, the general public. And I think the sort of notion of incentive to drive partnerships, incentive to improve, this is something that sort of keeps coming up. And I think a lot of where that incentive would need to be sparked would be sort of through a grassroots movement or sort of like a general consensus among voters and public and consumers that there's a need for change. So what I do wonder, and this will be our last question, we'll close it here, and Brigit, we'll start with you. Why do you think that payments should be top of mind for businesses and consumers more broadly? Why should the importance of payments sort of step out from sort of under the realm of those who are sort of immersed in it every day? And why should your average consumer and average business care more about payments?
I mean, I think with payments, it's not even something you choose to care about. It's just something that you face and deal with every day. It's really consumer facing, right? So whether it's personally sending money or having to pay a bill, or you're a small business trying to expand globally, and we know Canada's a trading economy, this is really important. There are a lot of pain points about around international payments for them. So they affect everyone. It should be sort of like what I said before, that plumbing that ideally is squeaky clean and works perfectly, but there's actually a lot of work behind it. And so that's why it is so important and exciting to see, I think, the government move ahead on these payment modernization changes. There's more to do, but they recognize that it is important, and they're taking action. And so we fully support it. And, Wise will continue to follow this closely and support, open banking, real-time rail, access to the payment system and beyond. So yeah, I think we have to face it. Payments are part of everyday life.
Thank you. Mahima, how about yourself? Why should people care about payments?
I think Brigit said it well. Payments are part of everyday life. And I think the second layer I'd say on why they should care is they're fundamentally getting ripped off in Canada. We have the most profitable banking sector of any developed nation. And then if you break that down, payments within the banking P&L is the most profitable sector. And so you have activity that's happening every day among consumers and small business, and then you have these huge profit pools. And there really is no incentive to look at it or bring it down. The mention around junk fees is a good one. It hasn't translated to payments. And the other kind of extending factor of this is if you look at small businesses in Canada, the research shows that they are the least price sensitive of any kind of segment. And there's a huge focus on speed of payments and international payments. And so if you layer the fact that they're price insensitive, that speed of payments is quite urgent, what's happened is there are all of these middle agents, that could be the banks, it could be other payment players that are layering on more profit pools that ultimately result in a higher cost to the consumer. So for example, to give a small business the confidence that their payment is actually going to be received, that the money is good, there is all these extra costs that are layered on into the system. And if we had a different and more advanced payment infrastructure, that would be already part of the service provided. And so you wouldn't have all of these extra costs. So especially in a world where like affordability is so challenging, I absolutely think that consumers and small businesses should care about payments.
Excellent. Thank you, Mahima. And Alex, we'll close with you. Why are payments important?
I think why I think they're important matters less than why consumers and businesses do think they're important. Let's not forget that very recently, Canada's small business community made a big fuss about the cost of payments, about interchange fees. The government heard them. They did something about it. Whether they did the right thing or not, depends on what your priors are and what you think makes the most sense. But it made it all the way to the top of the House. The debit and credit card code of conduct is being reviewed. There will be changes to that to make payments more transparent for Canada's small business community. Consumers care about payments too. I mean, just in the last budget, the government said it was going to crack down on what it called junk fees. And one of the types of fees it's targeting is NSF fees. There's a class action lawsuit brought against one of our biggest banks because they were charging their customer sending payment requests and hitting customers with duplicative NSF fees. And if you go read that big bank's defense, they basically said the payment system doesn't give us the ability to fix this issue. This is the same payment system that this big bank and probably a few others has been slowing the modernization of. So Canadians do care about payments. It's very clear. what maybe they don't care about is learning the intricacies of like how a pad works. But they do care about payments because it affects their life. And, you know, there are marginalized groups for whom payments matters even more. I remember not too long ago, OnlyFans content creators made headlines because they weren't able to get paid for the work they do on the platform. Certain networks were halting payments to them. You know, I can't think of someone more marginalized than, you know, a certain subset of sex workers who might find doing their job on this platform, which creates space between them and their customer, more empowering. And yet, because of payments, they can't do that. So, you know, payments matters to everyone. Everyone makes noise about it. That's why I think we should continue to care about it.
Excellent. Thanks, Alex. You know, been an absolute pleasure to engage, you know, with all of you today. Obviously, the expertise comes to the fore, but you know, but right there with it is obviously the passion and you know, sort of the, you know, the desire to strive for better. And I think, you know, when I think about that last question around consumers and businesses, I think that everyone's very well served with advocates such as yourselves, you know, advocating for change, leaning on your experience, leaning on customer-centric views, and understanding that, you know, there is better and that we should continue to strive for it. So look, if this was a teaser, you know, I would tune in. So I think it bodes very, very well for the summit, which is just on the immediate horizon. So, you know, once again, thank you so much to all of you for your contributions today. Really, really look forward to sort of seeing a little bit more of your insights at the summit, which is coming up. And on behalf of myself and Payments Canada, it's been an absolute pleasure. Thanks again.
Thank you.
Thanks for having us.